So last Friday on Wall Street has indeed closed in green, and you can see all the three indices were closed in green. But what does it mean is the actual question. Does it mean that the next session will also be in green? Do we go with the long positions? Do we go with the short positions? So that is something we need to understand with the week's close, and what are the indications that we have for the upcoming trading session on Monday 16th of January. So let us see what's happening as far as the trend is concerned. But before that, if you haven't yet subscribed my channel yet, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. Now, it does not matter whether the indices closed in green or not, because if you are looking at the price action, you can clearly see one thing, and that is range bound price performance. Okay, and this is the chart for Dow Jones. I would rather say this is the time when one must not trade the ranges. Either you will trade the edge or you will wait for the breakout or breakdown. That would be a profitable scenario, or that will be a right scenario for this, for specifically in this time, because things are about to get volatile, and volatility is not coming down. With each and every passing day, we will see big developments that are happening. Now this is the price chart of Dow Jones, and you can clearly see Dow Jones is trading at the upper end of the range. So we have 34,405, 410, and we have 34,620, 630. So this particular zone or this particular range is your resistance. So you rather take a short call at the end or at the resistance zone, obviously keeping your stop loss at 34,620 on the or 630 on the upside, and you can take a short call or leave it, wait for the breakout or wait for the Dow Jones to come to the support level. These are the only two options we have here. Don't try to here right now, don't try to take any long position. Do not expect that any breakout will happen. Let the breakout happen if you want to go long. If you want to go short, keep your stop loss, or keep your resistance. Use this resistance 34,620, 630 as your resistance, and take short calls. And even for short calls, don't go below 32,844 and 32,588. Okay, so trade the edges. Talking about Nasdaq, so Dow Jones is very close to the resistance. This is the range for Nasdaq, and Nasdaq has some more way to go. Okay, there are some more before the big resistance in the last couple of days will hit Nasdaq again. But Nasdaq is the most volatile one, so do not expect any certainty. Okay, in the middle of the market, any news came and we will see huge volatility suddenly spikes in. So these are big things that will probably happen. So don't go very sure or very certain until and unless the market is indeed indicating you, or unless you know how to deal with the market and whether the market gives you that affirmation or surety. As far as Nasdaq is concerned, you can clearly see Nasdaq is also trading in between a range where you have your immediate resistance at 11,248, which is your immediate target as well, above which you have 11,493 and 11,575 as far as your resistance is concerned. So although you have some limited upside, but because this is very close to resistance, and 100 200 points of move will come and go within a minute. Okay, so be very sure what do you want to do. The better strategy is to leave and either trade the edges, that's what I have said for Dow Jones, or just leave the range, let the breakout or breakdown happens. Okay, these are the only two scenario. And when S&P when Nasdaq and Dow Jones are trading in a range, so you cannot expect anything else from S&P 500. So for S&P 500 as well, we will rather focus on the range and we will not go beyond the range. We will wait for Monday, and then we will see what are the close, what market wants, and what are the positions that will probably build up at the end of the Monday. So as far as S&P 500 is concerned, there is still some room, and this room, as you can see, the Nasdaq is showing you that room, okay, that a little bit of upside, and that's what you can directly correlate with the price action in S&P 500. So for S&P 500, we have some more to go on the upside. So the resistance that we can get or we can found will be at 4100. So you have some upside which is left, so you can take your trades accordingly, and if you want to go long, keep your stop loss at 3958 and you can go for 4100 where you will face resistance. So either take short call at 4100 or wait for the S&P 500 to make breakout beyond 4103 or 4105 and sustain above that and take further long positions, or rather take short trades once S&P 500 hits 4100. Or the simple trade or simple thing to do here is avoid the range. So this is how you can plan your trade accordingly. Either trade the edges, number one. Number two, either leave the range, and number three, either wait for the range breakout or breakdown. So this is the end of the video. Thanks for watching.